Building wealth through real estate. Real estate has long been one of the most reliable ways to build wealth, offering investors opportunities to grow financial independence through assets that appreciate, generate income, and even offer tax advantages. Yet, success in real estate isn't just about buying property. It's about strategic planning, a deep understanding of the market, and an unwavering commitment to learning. This book is designed to guide that journey, giving you the tools, insights, and real-world examples you need to succeed. Your approach to real estate should reflect your unique aspirations, resources, and strengths. Whether you're interested in passive income from rental properties, quick profits from house flipping, or building an extensive portfolio, this book will show you how to shape a plan that works for you. As you follow, you'll encounter stories of investors like Sarah, who built a thriving portfolio while managing her career, and Noelle, who immersed herself in learning and mentorship to make her first big investment. These stories highlight the importance of goal setting, calculated risk-taking, and the power of persistence in real estate. From creative financing techniques to essential market research, this book covers all aspects of real estate investing, from beginner steps to advanced strategies like the BRR method, value-added investing, and even property development. Let's dive in. Real estate has always been one of the best ways to build wealth, and this book provides a practical guide to making real estate work for you. The journey begins with understanding your own personal wealth goals. A wealth plan isn't just about a general aim to make money. It's about identifying your specific financial goals and understanding the investment strategies that align with them. Whether your goal is to generate passive income from rental properties or to flip properties for a quick profit, setting specific, measurable goals keeps you on track. Developing a plan means being realistic about your financial resources, your risk tolerance, and your time availability. In the book, the authors introduce Sarah, who went from a college student with a basic real estate license to an investor with a portfolio of properties by creating a comprehensive plan that she revisited and adapted over time. Her story emphasizes the importance of continuously revisiting your goals, seeking advice, and being prepared to take calculated risks to achieve growth. Self-awareness is another key starting point in real estate investing. Real estate isn't a one-size-fits-all journey. Different paths suit different strengths. Knowing what you're good at, whether it's financial analysis, deal negotiation, or even project management, allows you to align your strategy with your strengths. The authors use Michelle and Paul as examples. Michelle has an eye for finding undervalued properties but struggles with budgeting. Partnering with Paul, who is skilled in financial analysis, lets Michelle focus on identifying high-potential deals while Paul manages the finances. Partnerships like these balance strengths and weaknesses, resulting in smarter decisions and stronger outcomes. Once you know your goals and understand your strengths, the next step is immersion. The authors emphasize immersion as the fastest way to build real estate knowledge, like learning a language by living where it's spoken. Real estate immersion means listening to industry podcasts, attending meetups, and actively engaging with the real estate community. One example in the book is Noelle, who became a successful investor by devoting herself to real estate education, building her knowledge, and seeking mentorship wherever she could find it. This commitment helped Noelle quickly grasp not only the basics, but also the nuances of identifying good investments and creating long-term strategies. This approach of consistent learning is crucial because real estate markets constantly evolve, and staying informed lets investors make educated decisions that align with the latest trends and data. When it comes to financing, the book encourages investors to look beyond traditional loans. Creative financing options can include methods like seller financing, cash-out refinancing, and forming partnerships. These strategies enable investors to buy properties with less money down or use their existing property's equity to fund additional purchases. In one example, the book describes a cash-out refinance in which an investor uses the equity from one property to invest in another, thus expanding their portfolio without needing new capital. By learning these creative financing options, investors can keep their capital working for them, maximizing growth opportunities while managing risk. No matter how you finance a property, due diligence is non-negotiable. Real estate success doesn't come from luck. It comes from meticulous research. Every property requires a deep understanding of the local market, including aspects like zoning laws, insurance needs, and rental demand. The authors share a story about Matt and Liz, who bought a property near a noisy highway without realizing the impact this noise would have on its resale value. They invested a lot in renovations, but ultimately sold the property at a loss because many buyers were turned off by the noise. This costly mistake underscores the importance of researching every factor that could impact a property's value. Another central theme is mentorship. Learning from someone experienced in real estate can accelerate success and help new investors avoid common pitfalls. For example, the book highlights how Eric benefited from the guidance of Herb, his mentor. With Herb's advice, Eric navigated complex deals and avoided costly mistakes that could have derailed his career early on. A mentor not only provides guidance but can act as a sounding board, helping you make better decisions. In addition to formal mentorship, building a network of advisors and industry contacts provides valuable support. Property management is also crucial, especially for rental properties. Being a landlord involves more than just collecting rent. It requires skills in tenant management, knowledge of legal regulations, and a reliable team of maintenance providers. A successful landlord ensures that properties remain profitable by keeping vacancies low and maintaining good tenant relationships. In some cases, the book suggests hiring property managers to handle day-to-day tasks so that investors can focus on expansion and growth rather than managing individual issues. As investors gain experience, they might be interested in scaling up to development. Real estate development, like Eric's project after a fire destroyed one of his properties, is a way to take investments to the next level. Instead of buying existing properties, development involves creating new ones from the ground up. In Eric's case, he chose to rebuild the damaged property into a luxury apartment complex, which he named the Phoenix. This leap from investing to developing was challenging but rewarding, requiring knowledge of budgeting, project management, and teamwork. Development can be risky but allows investors to create high-value properties customized to meet market demand. Mistakes are inevitable in real estate, but the book teaches that mistakes are valuable learning experiences. The authors explain that every successful investor has made errors, but that these experiences contribute to future successes. One cautionary tale involves Mark, who tried flipping a property without the right insurance. When a storm damaged the property, Mark found himself paying for repairs out of pocket. The lesson? Always ensure you have the correct insurance coverage before starting any renovation. Mistakes can be costly, but by analyzing them, investors gain insights that help them make better decisions moving forward. A critical but often overlooked aspect of real estate investing is building relationships. Successful investors network with a wide range of people, from city officials to contractors to other investors. For example, when Eric first entered the world of commercial real estate, he sought advice from successful business people, but they advised him against buying the property he was eyeing. Trusting his own instincts, Eric bought the property, and it eventually generated over $1 million in profit. His experience taught him the value of trusting his gut, but also highlighted the importance of getting advice from real estate specialists rather than general business professionals. One of the more advanced strategies in the book is value-add investing, which involves buying a property, making improvements, and increasing its income potential. Eric is particularly passionate about value-add projects, often comparing them to uncovering a hidden gem. This strategy isn't just about cosmetic upgrades. It includes improving the property's management, adding amenities, or even rethinking the layout to attract higher-paying tenants. The goal of value-add investing is to transform a property's potential and increase its value. When done right, this approach can yield high returns by capitalizing on the initial investment and effort. The book also covers the pros and cons of different types of real estate, including single-family homes, multifamily properties, and commercial buildings. Each type of property has unique advantages and challenges. For instance, single-family homes are easier to finance and sell, making them ideal for beginners. In contrast, multifamily properties allow for multiple income streams, which can be more stable. Commercial real estate, while often requiring more complex management, has the potential for higher income through long-term leases and higher rents. Each type of property serves different goals, and investors should choose based on their objectives and risk tolerance. One of the most exciting investment strategies the book explores is the BRR method: buy, rehab, rent, refinance, and repeat. This approach involves buying an undervalued property, fixing it up, renting it out, and then refinancing to pull out capital for the next project. Scott, a former office worker turned real estate investor, exemplifies the power of the BRR method. Starting with a single multifamily property, Scott rehabbed it, rented it out, and used the cash flow to build a portfolio that ultimately allowed him to leave his job and focus on real estate full-time. This strategy highlights the power of using the same initial capital multiple times to build wealth. Land investing is another niche that the book discusses. Although land doesn't produce immediate income like rental properties, it has unique benefits and potential for long-term gains. Investors can hold land for future development or lease it for uses such as farming, parking, or renewable energy projects. The book explains that understanding zoning laws and market trends is crucial for land investments because these factors impact what you can ultimately do with the property. The authors also address the importance of not overextending yourself financially. Many investors fall into the trap of taking on too much debt, which becomes unmanageable if interest rates rise or market conditions change. While leverage can be a powerful tool, the book encourages maintaining a cushion to cover expenses during market downturns. A balanced approach to debt allows investors to weather fluctuations without putting their investments at risk. Finally, the book emphasizes resilience. Real estate can be challenging, with obstacles like market shifts, tenant issues, and regulatory changes. Each setback is a chance to learn and improve, strengthening an investor's skills and resolve. The authors compare resilience to a muscle that grows stronger with each challenge. For example, Muhammad faced numerous difficulties with a vacant commercial property that wouldn't rent. He experimented with multiple uses before finally finding a tenant after nearly 3 years. His story shows that persistence and adaptability are key to long-term success in real estate. In summary, Real Estate Investing Made Simple provides a comprehensive guide to building wealth through real estate. The journey involves setting clear goals, leveraging personal strengths, exploring financing options, and learning from mistakes. Success requires dedication, resilience, and a willingness to learn continuously. With the right strategies, from value-add projects to BRRR, and a commitment to building strong relationships, real estate offers a path to financial freedom. The key takeaway? Real estate investing is a journey, one that rewards those who stay focused, stay educated, and stay resilient. Thanks for watching. If you enjoyed this video and found it helpful, please give it a thumbs up, subscribe for more content, and hit the bell icon so you never miss an update. We'd love to hear your thoughts, so drop a comment below and let us know what you think or what you'd like to see next. Until next time, stay curious and keep learning.